Now we're going to talk about position sizing. I speak with investors all over the world every single day. A big problem that I see all the time is that investors quite often are way too small. They own too many stocks. They're too diversified. In other cases, they're not diversified enough. Their position sizing is way too big. It's irresponsible. So I'm going to show you a little bit of math on how we calculate our position size using a backwards method, doing it the opposite way than most people. The first thing that we want to calculate is what percentage of our portfolio we are willing to risk on a single investment. If I'm feeling conservative, for example, I don't have a good feel for the market, maybe I've put on some bad trades lately, I'm not on a roll. Maybe I only want to risk 1% of my entire portfolio on this given trade. For this example, let's assume a portfolio of $100,000, just to keep the math simple. Therefore, 1% of $100,000 equals $1,000 of risk that I am willing to put out there on the next trade. If I'm entering the market at $100 and I'm putting a stop loss below 98, that's $2 per share of risk. When you consider that I'm willing to put $1,000 of risk on the table, if I were to divide that 1,000 by $2 per share, that gives us 500 shares. That's what we need to buy in order to express this trade out in the marketplace based on our personal risk management procedures, our risk tolerance, and our overall objectives. In the case that I really want to be aggressive, maybe I'm in a good mood, maybe I've been making good trades lately, but I want to shell out 3% of my portfolio on this next trade. That's the most I'm willing to risk. With a $100,000 portfolio, that means that $3,000 is at risk on this next trade. If I'm willing to put my stop loss $2 per share below where I buy it, that $3,000 of portfolio risk divided by those $2 per share of risk means that I need to buy 1,500 shares in order to express this trade in the market given my specific risk parameters, time horizon, and overall objectives.